Swing. Leaders of the Chinese internet giants and leading enterprises are showing off cutting-edge technologies and discussing the future of online business. High on the agenda is the internet financing, a booming sector which has recently received the new guidelines from the central government.
Funding Chinese industry. China's annual internet conference is discussing how to improve the financial market. The big question is how to link up entrepreneurs with the funding they need. Finance is often hard to come by in rural areas and for small and medium and micro enterprises. Some say internet-based finance might be the answer.
Online financing is a new area, providing more investment and financing choices. It is an important service for ordinary people as a complement of traditional banks.
One of the most popular aspects of the growing internet finance business is online peer-to-peer lending. This is happening across an estimated 2,000 platforms, most of them having sprung up in the past 2 years. These platforms help individuals lend money more easily to entrepreneurs or enterprises that need it.
We've been hearing for a long time that SMEs find it very difficult to get a loan. People in the financial business have known that for years. The government has tried to persuade traditional financial organizations to loan to the SMEs, but they were never able to convince them. That's because the business model of our traditional financial organizations won't allow them to loan just a few thousand, a few 10,000s of yuan. The loans won't even cover their staff costs.
But with the help of big data, it's becoming easier for online financing platforms to fill this void. Take Alibaba's Ant microloan as an example. Traditional banks on the same scale need 200 or 300 staff. However, Alibaba can handle it with only 20 to 30 people. The three-day event comes as the government unveils the first set of guidelines to govern the rapidly developing internet finance sector. The guidance oversees a wide range of services offered online, including loans, investments, and other financial products.
We are hoping that with the healthier development of internet finance, these guidelines can play an increasingly important role in supporting the real economy, particularly in regards to the financial inclusion system, micro-businesses, as well as facilitating the economy in China's remote areas.
The internet has become a major driver of economic and social development in China, and thousands of new businesses are entering the e-finance market every year. The integration of the internet and traditional industries has become critical to boosting growth and could have a vital role to play as China continues its economic transition.
Internet financing, fascinating topic. We'll talk about that. We have in our Beijing studio Jay Huang, former managing director of Intel China, who's now founding partner of J Stone Venture. Welcome, sir. And also in London, we have Mr. Duncan Clark, chairman of BDA China Consultancy that advises investors in China and coming into China. And also in New York, we have Mr. Ari Zoldan, who is the CEO of Quantum Networks and advisor to equities.com. We've been doing promotions for all of your companies. This is good because we are encouraging internet companies to flourishing in our country. So first of all, one very serious question to all of you. What exactly do you think, gentlemen, after reading the details of this new regulation coming out from the State Council about internet financing, what is exactly the goal of it? Is it about encouraging this sector or actually protecting the traditional banking industry? Let's have Mr. Clark first.
Thank you. Well, I always like to think that regulators regulate regularly. Regulators don't like to be pushed aside, and actually in financial service it's important that we have regulation. In answer to your question, I think it's a bit of both. I mean, we need to encourage new forms of lending and exploit the possibilities of the internet, the efficiencies that your report just covered. But also we need to protect not necessarily the banks, but the integrity of the financial system. And obviously there's a balancing act involved in how quickly these reforms can come into the market.
Integrity of the financial system, what exactly are you referring to? You have to be very clear here, Mr. Clark.
Well, China's just gone through a massive stock appreciation and depreciation, and some of this was due to margin loans, some of which were originated online. So if you don't regulate carefully, money supply and the uses of money, particularly in financial instruments, things can have a very bad effect in the real economy. So there is a very important role for government in regulating, particularly in the fast growth emerging consumer market. And a lot of the people coming online today are investing for the first time and borrowing money for the first time because they've never been able to borrow from the banks. So there's a lot of education involved here as well.
I see your point. Mr. Huang, do you agree with Mr. Clark? First of all, about who is the real benefiter out of this regulation. Secondly, is this going to, in a way, make the internet financing sector much more credible and safer, shall I say, for China in the long term?
You look at the guidelines in terms of objectives, and it says three things. Number one, they want to promote internet financing. Secondly, they want calling for collaboration between the traditional banks and the internet companies. The third is encourage and support startup companies. So from intention point of view, I see the State Council's intention is encourage internet financing for sure. Obviously, it have to be balanced, and then make sure, and then the other side the concerns has been taken care of. But overall, this is encouraging and the internet financing.
Interesting when you say the other side and also the concerns have to be taken care of. Exactly, you are referring to the traditional banks, I would believe. And what exactly are the concerns? Because there certainly has been some competition between the traditional banks and also some of the budding internet financing firms and companies.
Let's take a look at the Alibaba's and the NetBank. They provide microloans, for example. Currently, they provide loans at like 8,000 loans per day. And then they take them 3 minutes to process one loan. It takes them 2.3 RMB for processing a loan, which is less than 50 cents US. However, for traditional bank, it took them at least 1 day to approve a loan, and then the average cost for approving a loan is 2,000 RMB. So if I'm a small, medium-sized enterprise owner,
the answer is very clear.
Exactly. If I want to borrow 10,000 RMB before I got money, 20% of them is already gone. So this is I can see, and then the competition and coming from internet financing companies will be huge impact to the traditional banks. But this is exactly this country need and the economy need, which is how can we drive the money going to the real economy, going to the SMEs.
On the other hand, I have to invite your opinion, Mr. Zoldan. If you read those guidelines, one could notice this is the suggestion that the traditional banks would establish, quote-unquote, the pool for the capitals to go in, even for the sake of the internet financing companies. And therefore, some suggest this is really given them a very new opportunity and having a control of the potential in the future vis-a-vis, let's just say, internet financing companies. What is your view? Do you agree with this kind of opinions?
Well, I think what's very important, and people aren't really talking about, it's that it's not whether or not these internet companies are going to replace traditional banking. I think it's very important that they both coexist, and I think that's extremely important. And I think the traditional banks, as well as whatever product we're dealing with within the internet finance space, whether it's peer-to-peer lending, car financing, insurance financing, that both institutions work together. That's the first thing. Second thing, what people aren't talking about is the innovation that this is spurring also. We're opening up a new economy here, and it's creating new jobs, and it's allowing smaller companies to start playing in a space that's been primarily dominated by very large banking institutions in China. So I think we're moving into a very, very exciting space. And on the regulatory point, it's not so much, I think, frameworks and regulatory policies are extremely important as it relates to, specifically as it relates to banking, but I think it's more about getting the end user comfortable and informed about exactly what the risks are involved. Whether that's online tutorial, whether that's online tutorials, whether it's informational processes that need to put in place. But it is, right now, it is a buyer beware, and I don't think it should be that way.
Mr. Huang, do you agree, first of all? And secondly, there's one thing that Mr. Zoldan specifically mentioned, which is about encouraging entrepreneurship if we are cutting the cost of the finance, of course. But on the other hand, for the economy, to survive any kinds of potential bubble, there has to be certain level that companies, even startups, has to meet before they go to become popular ones in the market. Mr. Huang, this is a question facing us right now in China, I guess.
First of all, and right now we only see the guidelines. And then the details, devil's in details. The devil has not come out yet, and then it's going to be in the regulatory bodies. And then it's depending. We have to wait to see, how much restriction restriction they put into the regulatory strengths. Yeah, and hopefully they're not putting too much, and then to limit this innovator and internet and banking companies. On the other hand, everybody will agree with the other guests in terms of the safety part of it, reduce the risk. However, the new company doesn't really mean they create a higher risk necessarily. For example, take this Alibaba's net bank as an example. If the customer...
Jack Ma would be very happy about what you said today. You've been twice raising the same example, but go ahead. I know you have a point to make.
Listen. He doesn't need any promotional material out there. So.
All right, Mr. Huang, go ahead.
I think take as an example to say.
Sure.
For example, if a borrower is Taobao's and customer, they're doing business on Taobao. So the Ali and NetBank already know his credit history. And so there's no risk and then to lend to the Taobao's and the customer already.
Right.
And another side of it is for traditional bank, when you lend money to somebody, you worry about where it may take money and run. In this case, if a Taobao's customer using the money to pay for the suppliers, if the suppliers also send Alibaba's a customer, the money doesn't have to go to the borrowers, go to the supplier directly.
Right.
You can see this, big data and based new and banking, no local branches, and then everything in the cloud may not necessarily be higher risk.
I see your point over there. There are certain areas that might be with risks, but certain areas the other side is doing perfectly fine. Mr. Clark, do you agree with that, first of all? And secondly, what is interesting is we're also seeing some specific companies, just as the one that Mr. Huang repeatedly mentioning, could become monopoly in the field. Even though in China, monopoly has not been really a big topic, but all over the world it is. So even inside the United States for certain internet companies. So while at the same time we are encouraging different kinds of diversity between the traditional banking, internet financing companies, but at the same time, what about within internet financing companies themselves? Are we thinking already one step ahead, Mr. Clark?
Well, you're right, because we have something in the internet called the network effect. So you've seen with companies like Tencent and WeChat how everybody's sort of migrated to that platform, and we've been talking about Alibaba, how everybody's sort of migrated to shopping on Alibaba's sites and also paying with Alipay. So in terms of big data, there's already an unequal distribution, of information. But I think one of the things that's pushing the government to innovate here is that it's not just to protect the banks or help the internet companies. If they don't do anything, we have a lot of sharks out there. I mean, the whales maybe are the big banks, but we have a lot of sharks, people making loans at exorbitant rates or fraudulent lenders. So they need to innovate and take advantage of the opportunities from the internet before others do. And China's faced a big shadow banking issue and also fraudulent lending going on, and also fraudulent borrowing. I mean, this is not just about protecting the interests of the lenders. So the internet offers possibilities for fraudsters and for government and for entrepreneurs. So it's just a question of getting ahead of these opportunities.
If I could just comment.
Go ahead,
If I could just comment on that, the internet finance, especially in China, as relates to whether it's mobile banking or peer-to-peer lending, it's a very, very complex ecosystem, and there's always going to be pockets of inefficiencies, no matter what system we're trying to build. So, granted, there will be sharks out there, there will be issues, there will be stolen, there will be theft. But overall, the question is peer-to-peer lending, is
internet economy, specifically as it relates to mobile banking, is a positive for the Chinese market? And I think, unequivocally the answer is absolutely.
Yeah.
And the second point is, I think what Mr. Wang said was spot on in terms of the regulatory framework, and I think the devil is in the details on how that's going to play out. But I think overall,
Mr. Zoldan, I know the three of you are all cheerleaders for the Internet Financing Company because you're all involved in this field, which is fair. We should encourage that. But on the other hand, may I just raise a question which I said earlier? Even though it is a new industry that we are seeing in China, we are already seeing in other countries, for example, so-called big sharks. And there is something of a concern for monopoly issues in the future. So I'm asking you for your opinion about whether these kind of guidelines should also take a look at some future steps that China might need to take about monopoly and probably some other issues related to internet financing once it really blossoms in this country. One should go one step ahead rather than just look at the realities. Go ahead, sir.
1,000%. I mean, the governments, the private industry, very importantly, they must work together to make this successful. And in order to do that, they must build a blueprint and a roadmap about possibilities and variables that may occur 3 months, 3 years, 30 years down the road. And granted, it's very, very difficult to predict what's going to happen.
Right.
But I think having the cooperation between government and the private sector, they could build not only a framework, but they can also predict certain variabilities, i.e., digital currency, which we're going to be seeing a lot about. And, there is some traction with companies like Bitcoin and Ven currency. So I'd be curious to see.
Yes, Mr. Huang, what do you make of it? How many steps can we take now with this guideline ahead about the internet financing industry? Very briefly from you.
My concern right now is by the time the detailed regulation comes out, and you actually protect too much the traditional banks, put too much limitation to the internet banking and side of it. I think that's something I have a more concern of.
I see your point. Before we go, one also very important point coming out of this, that is, what about the literacy? I mean, finance literacy, especially internet financing literacy that we see urgently needed for the Chinese population. We talk about this, Mr. Huang, in the other program about other issues related to China's economy. How much do you think that role will be played by the government, the society, and also the business community? Before we go, briefly.
I think that's a very, very important issues, and then that for ordinary consumers to understand what's going on, what are the risks, and how to mitigate the risks. I think that everybody, including government, should play an important role doing that.
Mr. Clark, are we seeing that sign? Is the business community, while making huge money out of this, are they also fascinated about education?
Well, they need to be in the long term, of course, because if there is some major collapse in the industry, this will affect everybody. But of course, there's opportunities to make that extra margin. There's always going to be temptation for people to take it. But I think as we've seen with the recent stock market downturn, make your mistakes hopefully small and early if you're a consumer. So many people are just new to this world of investment and savings and lending even. So the government has to play a role. But ultimately, this is all about establishing trust. And companies, to really succeed, will have to be seen to be the most trustworthy player out there. And so it's up to them ultimately.
All right, final words from you. One sentence if you can, Mr. Zoldan. On the one hand, there's boom. On the other hand, one has to have a sober mind.
Well, I think it's all about the balance, and I think that as the regulation rolls out, we're going to find out a lot about the real devil in the details. But I think as I mentioned before, coexisting is critical. We
are looking forward to seeing the details and therefore the devils. We hope it's a very interesting outline for us later. We're certainly going to share with all of our audience later. Thank you so much, Ari Zoldan, Duncan Clark, and Jay Huang. Thank you, gentlemen, for being with us.